Gold and silver are nearly bottoming and could rally strongly from here. That's according to Chris Vermeulen of the technicaltraders.com, who we're catching up with in this video. And if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to GoldCore TV and hit the notification bell now. Chris Vermeulen, welcome back to GoldCore TV.
Hey, thanks for having me.
Now, it's been a very interesting couple of months since we last spoke in early January, and metals have traded sideways to down. We've had a bit of a pop in silver at the beginning of February, and again, it's traded down from that point, nearly breaking we're touching above the $30 mark very briefly, and then selling off. What are you seeing in the charts for gold and silver at the moment?
Sure. Well, let me pull my charts up. I can give you a quick view of what I'm seeing here. You should be able to see my chart there.
Yeah.
So this is the weekly chart of gold, and I'm just going to zoom out a little bit here. You can see we had the 2011 market top, and then we went into this multi-year basing formation where everyone struggled, hoping it was going to break out. And then in 2019, we saw this breakout. And since then, it's been having a nice series of rallies and pullbacks. We did have the COVID blip there, but overall, this is the first major kind of pullback. And gold is actually looking really good here. If we look at the shorter term kind of view here and we get some targets, we can get an idea of where gold should find kind of the critical support zone and where it will go next. Now, if we were to just use a Fibonacci extension and go based off this most recent high right up here, followed by this recent low, and then up to this reaction high. So this is a bear flag formation, a three-wave move. And so this sell-off to this rally and this continuation move is saying gold could go all the way down to 1643 area. Now, that to me would actually be a very, very bullish sign. So if it was to pull back to this level, we are going to end up breaking this pivot low that we saw right back here in June of 2020. This pivot low also earlier in the year. If we break this low, which we tagged just a week ago and bounced off it, if it breaks that, it's actually going to create some panic in the stock market, and we're going to see some pretty big selling, and it's going to flush the market out. We're going to see probably gold go to 1640, maybe spike below it quite a bit, maybe even to 1600, which is a whole number. Typically, whole numbers for gold act as support or resistance. So 1600 will be support. 1700 would be resistance if you're underneath it. So we're looking for this potential move in gold to potentially wash down to 1640, 1630. That would be actually the prime buying opportunity for gold. Now, right now it's oversold looking at this chart. And ideally, I'd love to see this rally and start a new leg higher. This really is a major bull market move. This is a big bull flag formation. It's just kind of oscillating down through here. And so it has a lot of work to do before it actually breaks to a new leg higher. It needs to not only break this falling trend line, but it needs to break these previous highs over here. And ideally, it's going to eventually have to break this high. So there's a lot of room for gold to really kickstart a full-fledged next bull market leg higher. But we are down in this sweet spot. And I've talked about this quite a bit, excuse me, between this 618, this orange line across here, and this 100 level. This is a really prime time to be accumulating gold. It's just at support. It's in a major bull flag formation, and it's getting close to a level and a time where I think it's going to start to reverse and start to rally. So I really like gold from that standpoint.
Great. And in terms of breaking out of that bull flag, then what type of level are we looking at to kind of confirm that we're breaking out of that?
Right, sure. So we could go based on a couple different levels here. We could go based off the highs. So we just draw a line across those candle highs right here and here. If we go based off a open or closing price, we can go across the tops of those, which is a little bit lower. That's opening prices. If you go based on closing prices, it'll be a little bit lower yet. Closing prices are really the most important level as a short-term trader, because a lot of times we see price spike through resistance or support during the day. And then by the end of the day, or the end of that week for this case, price will recover and negate it. So it's actually most important to focus on closing prices, which is the lowest level here. So if gold was to rally over the next 2 or 3 weeks, we needed to get above 1,800, and that'll be a pretty significant level for it to break through. It's going to probably struggle there. There's a lot of resistance through a lot of weeks here. We had a pivot low here. We had also a lot of couple of weeks traded here. So that would be the start of it. 1,800 and above could be the start of something really exciting for gold. And silver's got a little bit different of a chart. Silver's actually holding up a lot better than gold. When you look at silver here, it broke out into a bull market. It had a pretty deep correction and pullback, but it's actually still making a series of higher lows, and it's making a series of higher highs. And that's the definition of an uptrend. So it's stuck below the highs that it's put in late last year and early this year, but it is actually working its way up in a nice uptrend, continuing to move higher. And we'll just have to see. Eventually, I think silver will be the first one to really break out. It's going to have a very explosive move when it does. There's a lot of eyes on silver. I think a lot of big investors and traders are really keeping their eye when it closes above about 27.60 on the continuous contract here for silver. That's US dollars. That is going to be a very strong breakout point where from there on, it could rally up to about 38 really quickly and beyond there. So that could be the start of a really big short squeeze. So that this level here, 27.60 is going to be really important. Obviously, we still need to close above these highs up here around this 30 mark. But there's a lot of upside potential, very explosive in silver that I think will happen a lot quicker than what the gold price will do.
Obviously, these markets aren't going to move in isolation. And if we see a strong rally in gold and in silver, it's probably indicative of things going on in the broader markets. What are you seeing in stock markets at the moment?
Yeah, the stock market's got some pretty interesting signals. If we take a look at the Russell 2000, I'm going to go back to the daily chart for these. I like to look at the stock market. I actually base most of our precious metals trades off the stock market because money's typically flowing either into stocks or out of stocks. You need to know whether you need to be, which asset class money's flowing to. Right now, the stock market continues to be in a strong uptrend. You can see the Russell 2000, huge run over the last several months, continuing to bounce its way higher. And at this point, it recently hit new highs. It's put in a little bit of a reversal wick here. Looks like it wants to continue to go higher. Small caps are leading the way. Money continues to pile into small caps and into the Dow Jones industrial stocks, which are the industrials, energy. If we look at the Dow's been moving up very nicely, going higher. And just remember this, just take a look at this big multi-week rally here versus what the NASDAQ chart is going to look like when I show you in just a minute. But money's been piling into the utilities, or not utilities, well, they have been. Utilities, energy, industrials, small cap stocks that have been undervalued, and money's been coming out of all the technology, the EV market, the solar. They've really seen a lot of selling going on. So we're seeing a rotation. This is something really big. We're not seeing money piling back into the same leading sectors that we saw last year. We're actually seeing money come out of all of those in a very big way. And now they're going into a totally different breed of stocks, small caps, industrials, banking, financials. So it's a very different picture. And the stocks that are rallying now are more indicative of saying, hey, this economy is coming back to life. And I think people are betting on the economy now in these stocks because of the huge stimulus plan in the US, going to, prop up all kinds of jobs and projects. So it's going to generate a lot of sales, a lot of movement, money flow. So people are definitely focusing on those now and not focusing on technology. So if we look at the NASDAQ real quick, it's the opposite picture. It has been moving down in a very dramatic way. I mean, we saw the NASDAQ fall roughly 12% from the high.
Yeah.
Recently, it's had a nice little rebound. It's up about 6-7%. But there's just not a lot of interest in that at this point. I mean, it is reversing, showing signs that it wants to get some legs and move higher. But the stock market has got a little bit of mixed signals just because there's a major shift between what sectors are hot and which ones are not. And we're seeing money kind of try and cross over to a totally different breed of stocks. So we get this really mixed market where NASDAQ is down big. Small caps are up big, and that's just because money is shifting hands right now. And that's what we want. We want to see new leaders come to life, because new leaders mean there's new opportunities. There's going to be new sectors that are going to have big gains. And so rotation is good.
We always try to get our audience and our community to focus on, as I say, the wider markets and follow the flow of money. Now, one place that we are seeing big flows coming into and continue is into the crypto space. And we've seen a massive rally in cryptos, and in particular Bitcoin, over the last year and more. Can you show us a graph of that? And is there anything to be read from that graph?
Well, I mean, it's in a raging bull market. To me, it's in a blow off top, like an exhaustion move where you don't know where the top is. You can't really gauge it too much. So I'll give you two views here. So this is the daily chart. We can get an idea. We talked about it when Bitcoin had pulled back a couple of weeks ago and just started to break these highs. I think it was on this day here. We talked about this new rally to the upside could go all the way to roughly 73,000 and change. So we're looking for around 73,000 on Bitcoin as the next move. Where it's trading right now is very similar to this type of move right here, where the market rallies up, it consolidates, and then it starts to break out, and then it takes a little breather there, and then has that final push. Well, we're seeing the same thing now. We've seen price start to rally up. It's consolidating. It's just starting to rotate up. And 73,000 is the next kind of logical stop. Now, if we look at the weekly chart, this gives you an idea of just how explosive, the Bitcoin move is.
Yeah,
it could reverse in a huge way at any moment, or it could go absolutely ballistic and go past 73 and hit 100,000 and beyond. This type of chart is, if you're on the right side, you can make a ton of money, but it is going to move very quickly. You look at this weekly chart, and just from this high down to this low, I mean, 22% in 5 days. It's done that a few times. This last high to the low was 20 or 33%. So it's volatile. It's in an uptrend. You could jump in and chase it, but just know it's got to be a small amount of capital, because at any time it could reverse. And when this money train stops, it's going to crash, because everyone's going to bail out. Because a lot of people got scarred on the last, when it hit 20,000 a few years ago and crashed, and they were all millionaires, so many millionaires. And then they, were just normal Joes again a year later, and they're wishing they'd locked in gains. So when this starts to roll over, there's a lot of lessons that were learned last time around that people are going to just exit Bitcoin. And I think it's going to be like this massive collapse. It's a very different breed trading cryptos. It's a much younger group, which they don't have a lot of experience trading and managing positions, which is the hardest part of trading. Like, we can all get into winners and watch gains go up, but when it's done, when you go to cash, did you actually lose money or make money? And that's the problem, is people don't know how to scale out. You gotta, you can't always catch every winner. You can't get out at the top. And so there's going to be a lot of
money management.
It's all money management. It really is. I mean, you can make money in falling markets. You can make money in sideways market. It's just how you get into these trades, how you manage those positions where you're locking in gains, trimming stops. I mean, getting stopped out, nobody likes it. But if you get stopped out, it's actually a really good sign. It means you're following rules. You've got management in place, and you're actually executing what needs to be done so that you don't take any bigger losses, right?
Chris, and just to round it out a bit, what's your take on what's going on in the bond market at the moment? Because obviously there's a lot of focus on bonds, and particularly on the yields at the moment ticking higher. Do you think there's more to go on that?
I think the bonds are almost putting in a bottom. This is the daily chart of the weekly chart of bonds. And, we are in kind of full free fall mode. We're seeing volume spike up. Not a lot of people want to buy US bonds. They think the opportunity is still in the stock market. Obviously, they think there's some type of risk buying into bonds. We're seeing the yields kind of spike. So they're saying, hey, I'm not getting into bonds until those yields are worth the risk, in their opinion. So we're seeing yields kind of work themselves up, and we're seeing bond prices fall. I think the bonds are really close. I think we're only a week or two away from bonds putting in a bottom. But I think there's still quite a bit of downside. I think we could see the price of bonds fall another 4 or 5% from where we are right now, which is pretty dramatic. If I was to just quickly look on the chart, just see where that is. It's somewhere down here. So it would be the bottom really falling out of bonds. And that I think would be some washout low, some big event where it'll put in a very strong spike and then chop around for a while. We've seen bonds fall out of favor before. I'm thinking we're going to see something like this where you just have one massive down week where the bottom completely collapses. We're in this similar type of scenario where people just don't want to hold bonds. But I do think they're almost done to the downside. I think there's going to be actually some pretty good opportunity in bonds, but I don't think it's going to happen for several more months. I think bonds are going to find a bottom. The stock market might become a little choppy, and that might start to get some concern, and people move to bonds. Average investors will move to bonds, support the price. And then eventually I think bonds could do well, but that won't be till probably the second half of this year when bonds, I think, become favorable. Right now, they're not seen as a safe haven. They're not a hedge or of any sort. Really, you just got to steer clear of them. But there will be a time when I think they become a safe haven again, and they will be something worth owning, potentially better than the stock market. But I think there's a lot going to unfold over the next 3, 4, 5 months this year in the stock market and bonds. And there could be a big change in tide. We'll just have to see. I mean, it's so much stimulus. This market is just constantly propped up. The Fed's willing to do whatever it takes. And I mean, that's great as long as everybody owns stocks and is able to get out with a profit before some collapse eventually hits.
Chris, it's always great to catch up with you. Can you remind our audience again about how they can learn more about what you do, maybe where they can follow you on Twitter or Facebook?
Sure, yeah. So I've got the website, thetechnicaltraders.com. And on there, we do daily analysis like this, pre-market. We cover all the major markets and sectors, and we're constantly looking to try to play the best asset now. A strategy we use, best asset now. It's focusing on which sector ETFs or sectors, stocks are the best to own. And on our website, we actually have a free webinar where I teach this in a course on there, so you can learn how to trade the best assets, own them, how to manage those positions. It's everything you need, a complete trading strategy. We just teach that, and we're kind of building our following, doing that, teaching and educating people so they can make, money on your own. And we also do options. When the market's trading really choppy, we've been trading a lot of options in March, and every trade's been a winner. And the nice thing about options, selling options, is that we can take advantage using directionless strategies. So it doesn't matter which way this market goes, we're selling premium, and we get to profit from a sideways market, more or less. So every market's got a unique strategy that will only work for that kind of market condition. And so we teach that at Technical Traders. 1 month you could be using this strategy. Next month, you need to focus on this strategy. It all depends on market volatility, the trend that it's in, and how things are going. And most people don't realize you need to change your strategy every month, sometimes even from week to week, depending on how active you are. So it's important to know when to be in the market, when not to be, what strategy. And that's what we teach at Technical Traders, as well as give out our trade alerts so you can follow what we're trading and do the same thing.
Chris Vermeulen of thetechnicaltraders.com. Thanks for joining us again on GoldCore TV.
Thanks, David. Take care.
Thanks for watching. And if you enjoyed this video, check out this must-see interview that I did with David Brady of Global Pro Trader. Go watch that next. And if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to GoldCore TV and hit the notification bell now.